In this video, I'm going to talk about the IRS form W-4 for 2019 for single with your first job. Now, this is going to be a very simplified walkthrough. And if you have this version, the paper version, I'm going to show you exactly how to fill it out to put it on the paper version to give to your employer. But we're going to use the online estimator because it's the most accurate and the easiest way of filling out the W-4. Once we get the answer for the online version, I'm going to show you how to put it on the paper version. Now, because this is a simplified walkthrough, anything that is more complicated, I'm going to point out along the way so you can do a little bit more research and figure out in your particular situation on what you should do. But this is going to be a simplified, quick walkthrough. But before we do that, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. So if you don't have the paper version or you need another copy, I'm going to put a link in the description at the bottom. There's also going to be a link on the calculator or the estimator that we're going to go through that you'll also be able to print off the paper version. But again, the online version, super simple, the best way to do it. And even the IRS says use the online version to get the answer and put it on the paper version. And all those other pages to the W-4 that go along with this sheet, you don't need them. They're just a work through or a worksheet that you can go through on your own. But again, you don't need them because you're just going to use the online estimator and it's going to give us the answers. It's going to be super simple. So I'm going to go ahead and pull it up on the screen and let's go ahead and get started. Now I'm going to put a link in the description at the bottom for this online estimator. But if you just want to follow along, I'm just going to Google it, IRS W-4. And you can see the calculator comes up, but it's actually now called the estimator. So go ahead and click on that link right there. It says tax withholding estimator. It's going to bring you to this page and it goes right into it, which is great. So scroll down, and for this walkthrough, we're choosing single. So check off single. If you're filing single, this video is for you. Scroll down just a little bit. Now this might be a little bit tricky if this is your first job, so you might still be considered a dependent. If you're living at home, talk to your parents. If they're claiming you on their tax return, then you must click off yes. Otherwise, click off no. If you have a question about it, there's actually a link right here with a walkthrough on whom I can claim as a dependent. Now that's if you can claim somebody else as a dependent, but in this instance, you're talking about yourself. So you can see right there, the IRS says that most people under the age of 19 and most students under age 23 who live with their parents or other relatives are dependents and should select yes here. But for this walkthrough, we're going to select no. The next one's going to be if you have dependents. So if you have a child or a dependent, then you want to go ahead and check off yes. Now the next section is going to be your income. Do you or will you hold a job? This answer is going to be yes, because you have a job. You have to if you're filling out this W-4. Or you have to have income. So for this one, we're talking about a first job. So that's what we're going to do. We're going to check off one job. If you have multiple jobs, go ahead and check them off. It's not a whole lot different. It'll break it down for you. But for this walkthrough, we're going to do one job. Now, the next section is a pension. Will you receive income from a pension this year? Now, if you have a pension that's being offered to you, at this point, you're working for that pension. So you're earning those dollars. So this is only referring to income coming to you. So even if you might be offered a pension when you retire, this is not what it's asking. It's asking if you're actually getting that paycheck today. So the answer is going to be no. Scroll down. Other income. Any of these other income sources, same thing as above. If you're receiving these dollars, not if you already are contributing to these retirement plans, because you could see the IRAs and the Roth IRAs and the 401ks, all that information is you saving into it, not receiving it. This is only referring to receiving those dollars. So for most people with their first job, you're not going to check off anything. Scroll down, demographics. I will be 65 or older on January 1st, 2020. Most likely not. Am I blind or legally blind? The answer is probably not. But if it is, then go ahead and check it off and click next. So this is where we're going to enter in our income for this first job. A little tricky, but I'm going to show you what you should look out for to make sure that you get it right. So your first job, do you expect to hold this throughout the whole year? Well, unless you started this job on January 1st, because remember, this is your first job, then you're going to want to check off no and enter in those dates. If you don't, you might make a little bit of a mistake because it's not going to ask you the dates if you say you're going to be there for all 12 months of the year. So let's check off no, and we can enter in these dates. And for this walkthrough, I'm just going to enter in 11/20/2019. And 12/31, expecting that we're going to continue this job into next year. So you can just put 12/31. And how frequently are you going to get paid? Now, if you're getting your paychecks every week, that's weekly. Every 2 weeks is more along the lines if you're getting paid every other Friday or every other Monday, whatever it is, every other Monday, then that's every 2 weeks. Now, twice a month is something along the lines of like the 1st and the 15th of every month. Now, the difference between those two is every 2 weeks is going to be 26 pay periods for the year. Twice a month, 24 pay periods per the year. And of course, once a month is going to be 12 pay periods. Slight difference in those middle two. You just want to make sure that you're getting it correct. If you don't know, ask your employer. They'll be able to tell you. So let's say for this example, we're going to do twice a month. Now we're going to scroll down and we're going to enter in our wages that we expect to receive. Now this is the tricky part, or could be tricky. Now this is only what you're going to earn this year. So for example, let's say that we're going to earn in this walkthrough, we're going to earn $50,000, but we didn't start that job on January 1st. So even though we're going to make $50,000 on an annual basis, but we started this job, according to here, we started this on, or our first paycheck was 11/20. So what we want to do is we want to do some simple math. If we have $50,000, and for this, we're going to use that 24 pay periods, we can divide that 50, divide that by 24, which is going to give us $2,083. And that is what we're going to use per paycheck. If we're just assuming that we're going to get 3 paychecks in 2019, we can do $2,083, multiply that by 3, and that's going to be $6,250. So you have to do some simple math to figure out how much you're going to make in 2019. So we'll put $6,250. For this walkthrough, we're going to assume that we're going to make no bonuses. But if you're wondering what qualifies as the bonus, you can click on that little question mark and it will tell you. But again, this is one of those things you can look a little further into that, but we want to simplify this walkthrough. Did you or will you contribute to a tax-deferred retirement plan such as a 401k? So this is anything that's going in pre-tax. So if you're a Roth IRA, that's after tax. 401k or traditional 401k, that's pre-tax. So what they're looking for is those pre-tax dollars. Why? Because it's going to lower your taxable income. So in that same example, we're earning $6,250 for 2019. If we put $250 into the 401k, then that would reduce our total tax liability. That's why it wants to know it, so it can make sure that you're withholding the correct amount. For this walkthrough, we're going to choose no. Now, a quick note on that 401k. If you're going to contribute into that 401k at a later date, maybe you're not eligible now, or maybe you just don't want to contribute right at this point, well, go ahead and choose no. And then when you start to contribute to that 401k, you can make that adjustment by filling out this form again and the W-4, and then giving it to your employer to make that adjustment at that time. Now we can scroll down. It's the same question really because it wants to know what you're putting in pre-tax. So the HSA, the FSA are both healthcare savings plans, and those are going in pre-tax, again, helping you reduce your overall tax liability. So we're going to choose no, but if you do have those plans, figuring out the same way that you figured out how much you're earning in 2019, you're going to apply that same formula to these plans, and then we're going to choose next. Any adjustments? Let's take a quick look at these adjustments. And this is one of those parts that you're going to have to look a little bit further if you think any of these apply to you. Now, these are all ways that you can reduce your total taxable income. So if you have student loan interest, you can do up to $2,500 there. If you have educator expenses, if you're a new teacher, you can put those in there. And you scroll down, you can see even alimony. If you were previously married, now you're divorced and you have to pay alimony, you can put that in there. And this is alimony paid. But again, this walkthrough is going to be really simple. So I'm going to assume that we don't have any of these and we're going to click next. But if you do, just take a minute, go through it and enter the amount that you have, and it'll automatically make that adjustment. And if you do have questions or specific questions on those adjustments, leave them in the comments and I'll go back and I'll do specific videos for those adjustments if you have questions on any of those adjustments. Now, what I can't answer for you is I can't tell you what number that you have because it depends on all the factors we're going through this entire estimator. So you really have to go through and do the best that you can. But if you have a specific question, let me know in the comments down at the bottom. Now this next section for deductions from your income, you can see it right there for singles. It's $12,200. It's going to go up slightly in 2020, but for 2019, it's $12,200. What that means is it's going to reduce our total taxable income right off the bat. So if we're taking that standard deduction, and I'm going to check off that radio button, it's highly unlikely that you're going to take the itemized. Basically what that means is you have to have over $12,200 in write-offs on your taxes in order to reduce your taxable income enough where you're not going to take the standard deduction, which is very rare. So most of the time you're going to take the standard deduction and then we're going to move on. So what that means is in that same example that I was talking about, the $50,000, if you looked at tax brackets for $50,000, you might look at it and say, okay, for $50,000, that's going to put me in the 22% tax bracket. But once you realize that you had that standard deduction, it brings you down to the 12% tax bracket. So while your gross income might look like you're in the 22% tax bracket, you're not going to be taxed at 22% on any of these dollars because you're at $50,000. So just a point that you should know, but it's not going to affect anything here because, again, the estimator is going to do it all for you. Click on next, and now we can see the tax credits. Now, tax credits are super valuable because for every dollar in tax credit cancels out $1 in tax liability. So if you owe the IRS, let's say $1,000, that's what your taxes are at the end of the year, and you have a credit for $1,000, that means you owe nothing. So credits are super beneficial. Now let's see those tax credits. If you want to look at a little bit more of those tax credits, anything jumps out at you, go ahead and fill it out. The one that you might qualify for the most is the retirement savers credit. And depending on your income, you want to take a little bit closer look at that because by saving into a retirement plan, even an IRA or a Roth IRA, you might actually get a credit for doing that, which would be huge. So basically it's subsidized savings. So the IRS says if you're on the lower income side, which is possible, especially if you're starting your first job towards the end of the year and you're not going to earn a lot. In this example, we're earning only $6,250. So if we saved into our retirement plan, we might actually get a credit in addition to saving. So that could be hugely beneficial. So you want to look a little bit closer to that. I've done some videos on the retirement savers credit, and that's what it is. It says retirement savings, but it's retirement savers credit. Now, if you want to look a little bit further at any of these credits, I'll put that link in the description at the bottom too. But you can see it on this other page. It goes into detail on all the individual credits that you can qualify for. And some of these you might want to take a look at to see if you can reduce your overall tax liability. So let's go ahead and go to the next section. I'm going to click on next. Now this is the results page. Now right off the bat, you might be a little confused because it says I don't have any tax liability. Why? Because earning $6,250 when the standard deduction is $12,200, it's going to cancel it all out. But if you do have a number here, and I'll quickly go back to the beginning and just increase this number to show you what it would look like if it actually had something in there. So let's say that we made $25,000 for 2019, and we'll go back to that results page, and you can quickly see that your anticipated tax obligation is $1,345, but we haven't withheld anything. That's why it says zero. Your expected tax withholding is zero. And then your anticipated tax obligation is $1,345. So we most likely have to make a little bit of an adjustment. But if you scroll down, it's going to give you two options here, which is kind of nice. Do you want to get close to zero or would you like a little bit of a refund? Let's go ahead and say I want a refund. And then we can zoom in there and scroll down. And what you're looking for. Now, this is a great example of something that looks crazy, but it's the way you should fill it out. And it's on line 5. This is telling us on line 5, enter 24 allowances. And then on line 6, enter 0. And that's because it has to make a massive adjustment for the amount that we're going to earn because filling this out, we're at the end of the year. So it really depends on what time frame that you're filling this out or when you got your job, what your particular situation is. Because if you look at the paper version and you just walk through the paper version, you might think that you only should put like 1 or 2 down. But in this case, it's just going to adjust it to make sure that you're as accurate as possible. So go by this estimator. It's going to be as accurate as possible. And you can see that link right down there, download a blank W4 form. So if you don't have one or you need another one, you need to redo it, go ahead and click on it, print it out. And you only need to print out this right here, this page. So this is what you're going to fill out. So based on this information, that entering that 24, it's going to be on line 5 of the bottom of that W4. And only if you have additional withholdings, which is also kind of rare. Usually the higher income earners might have additional withholdings, especially if you weren't withholding enough earlier in the year. That's where line 6 is going to come in. But for the most part, especially in this example, it says 0. Just leave it blank. You don't have to fill it out if it doesn't tell you to. And on line 7, that's exempt. And that's only if you are exempt. It will tell you if you're exempt. It'll say, put exempt on line 7. And if it doesn't say anything about line 7, just leave it blank. It doesn't matter. Fill out your basic information at the top, your name, your last name, your social security number, your home address. Check off single on section 3. And then at the bottom, obviously you have to sign it and date it. But 8, 9, and 10, if you don't know those answers, your employer will, so don't worry about it. And that's all you need to do. Just take that page and hand it to your employer, and you can take all those other pages and toss them in the trash can, or you can put them in a drawer. It doesn't matter. You don't need them. All you need is this page right here. Now, if you're curious and you just want to have a record of how you filled it out, go back to the online version and you can scroll down and it has all your answers in there. So if you ever had to make an adjustment or had a question on how you filled it out, or maybe you earned more money, you forgot to fill it out and you want to know what happened along the way, you have that information right here so you can save it for your records. The IRS was nice enough to put a little print button down there. And of course, if you want to start over and do it again, you can. It won't save it on this calculator. So it's not submitting it at all. This is just a calculator and it's going to be completely erased once you close your browser. So don't worry about what you enter in here. If you go through it 100 times, it doesn't matter. There's no way to submit it online. You have to actually take that information and put it on the W-4, the paper version, to give to your employer. And that is it. This is a simplified walkthrough. If you're single, this is your first job, there's a good chance that you don't have a ton of credits, or maybe just a couple of credits, minor deductions. Maybe you're saving into an IRA or your 401k or a Roth IRA. Any of that information, go ahead and enter it in. Again, if you have questions, leave them in the description at the bottom. I have a ton of other videos, but if you can't find them, let me know. If I don't have the video, I'll try my best to get it out there and I'll try to point you in the right direction. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.